London, May 1999. The British finance minister, a certain Gordon Brown, calls a press conference and announces a historic decision. The United Kingdom is going to sell nearly half of its national treasure, 395 metric tons of gold accumulated over generations. Officially, the decision is modern and rational. The gold is lying dormant in the vaults without earning a cent, while government bonds pay interest every year. So the plan is simple: sell grandfather's metal and instead buy modern currencies, 40% in dollars, 20% in yen, and especially 40% in a brand new currency that has just been born, the euro, only 4 months old.
For 300 million Europeans, from grocery shoppers in France to bankers in Germany, today was the first workday for their new common currency, the euro.
The governor of the Bank of England is firmly opposed. For him, a nation's gold is not an investment to be optimized, it's insurance against catastrophe. Brown doesn't listen to him. Worse, he makes a rookie mistake by publicly announcing the entire sales schedule 2 months in advance. Something never seen before. The market sells before him, and the price drops another 10 before the very first auction. Remember this story about insurance? We'll come back to it. But what Gordon Brown doesn't know yet is that he has just chosen the worst moment in modern history to sell. A mistake so monumental that the markets will end up giving it a name, and it will cost the British people a fortune. I'll reveal the number to you in a few minutes, and believe me, it's staggering. But above all, this story raises the question that brings us together today. What really protects your money? Because two champions are currently competing for that title. On one side, a metal that's 5,000 years old, born in the explosion of stars which the world's most powerful nations continue to hoard in their vaults. On the other side, a currency born just 16 years ago in the code of an unknown person, declared dead 472 times by the media, and resurrected every time. This currency is Bitcoin. And in 2025, for the first time in history, these two found themselves face to face at the same time in the same financial storm, and only one was left standing. But how can a simple ancient yellow metal still be on the throne? Why did the most revolutionary currency in centuries collapse at the worst possible moment? And above all, which of the two truly deserves to protect real wealth? Hi, Entrepreneur Mindset. I hope you're doing well. Today, we're settling the biggest financial debate of our time: gold versus Bitcoin. It's a story of a king, a crash, and a resurrection, but also a betrayal, erased fortunes, and death followed by resurrection, with a lesson that could very well change the way you see money. To understand this duel, you must first meet the reigning champion, whose reign began long ago. 5,000 years ago, long before banks, long before paper money, the pharaohs of Egypt were already being buried with it. The Romans paid their legions with it. The Spanish empires crossed the oceans for it. In every era, on every continent, people chose the same metal to store their wealth. That metal is gold. But why this one? Why this metal and not another? The answer is mind-blowing, literally. And it doesn't come from Earth. It comes from space. You'll understand why by going back in time a little. Every gram of gold that exists on our planet was born in a cosmic cataclysm, the collision of two neutron stars, an event of unimaginable violence. In other words, the gold in your wedding ring was forged in a stellar explosion long before the Earth was born, and that's why no one can make it. Alchemists spent centuries trying to turn lead into gold. They all failed. The gold that exists is all we'll ever have, and the amount of available gold is tiny. As crazy as it may sound, all the gold ever mined since the beginning of humanity, all the mines, all the treasures, all the central banks combined, the gold of the Banque de France, would fit in a cube barely 22 meters on each side. That's shorter than an 8-story building. That's why it's so valuable. It's rare, impossible to manufacture, and doesn't tarnish, since a coin minted 2,000 years ago still shines today. And gold has a superpower that nothing else has. When everything collapses, it rises. Wars, crashes, hyperinflations. With every disaster, while bills turned into worthless paper, those who held gold weathered the storm. That's why it's called the ultimate safe haven. But be careful, this is where the story gets really interesting, because the king has also gone through his own rough patches, and the worst one lasted 20 years. January 1980, after a decade of crazy inflation, gold reached a historic high of $850 an ounce. Then the Federal Reserve crushed inflation with record interest rates, and gold collapsed. It lost 70% of its value and sank into 20 years of purgatory. In the 90s, nobody wanted it anymore. Economists nicknamed it the barbaric relic, a dusty vestige of another era doomed by modernity. The ultimate symbol of this disdain came in 1999. The United Kingdom, convinced that gold is finished, decided to sell 395 tons at about $275 an ounce. That's the lowest price in 20 years. In the following years, gold bounced back and went on to rise for 25 years today. This sale is considered the worst financial operation in the history of central banks. It even has a nickname, the brown bottom, named after the minister who ordered it. And that's what's fascinating about gold. It can hibernate for 20 years, it can be despised, mocked, buried by experts, but it will never be worth zero, and it always ends up coming back. Even someone who bought at the worst possible time in history, at the peak in 1980, has now multiplied their investment by more than 6. And just look at where gold is today. In 2025, faced with global tensions, gold broke more than 50 records and rose by over 60%. In January 2026, it reached a historic high, around $5,589 per ounce, with the fastest $1,000 increase ever recorded. Central banks worldwide have accumulated over 1,000 tons annually for the past 3 years. When the most cautious institutions on the planet protect entire nations with the yellow metal, it's not a coincidence. Here is the king. 5 millennia of rain, scars, a journey through the desert, still standing and higher than ever. 19, just 10 years after Gordon Brown's sale, the world collapses into the worst financial crisis since 1929. The banks blew up the system, the government saved them with taxpayers' money, and trust is in pieces. Everyone is desperately searching for this famous insurance against disaster. It's in this chaos that a stranger, hiding behind the pseudonym Satoshi Nakamoto, launches a revolutionary idea, a currency without banks, without a state, that no one controls and whose quantity is limited forever to 21 million units. Imagine a cake cut once and for all into 21 million slices. No one, neither government, nor central bank, nor billionaire, will ever be able to add a single one. It's engraved in the code. And to understand how it stands on its own without a bank, imagine a giant ledger, constantly photocopied onto thousands of computers all over the world. To cheat, you would have to falsify all the copies at the same time, down to the second. Mission impossible. That's the famous blockchain, Bitcoin's collective safe. And to be honest, what Bitcoin brings is a real revolution with tools that gold has never had in 5,000 years. The first is absolute mathematical scarcity. Remember, gold is rare, but we still extract more than 3,000 additional tons every year. Its global stock keeps growing constantly. Bitcoin, on the other hand, is capped at 21 million for eternity. By this specific criterion, the challenger is even rarer than the king. This is a first in the monetary history of humanity. The second tool is transport. Try crossing a border with $100 million in gold. You need an armored truck, armed guards, customs declarations, and a lot of luck.
We begin this report with an incredible story. Yesterday afternoon, around 3 p.m., a Brinks armored truck traveling on National Road 17 between Arras and Lens was attacked with explosives by a group of 4 or 5 people. Hooded and heavily armed, these robbers set up a fake road narrowing to slow down the truck. They then blew it up to steal almost all of its cargo.
With Bitcoin, that same fortune can be held in 12 words memorized in your head, like the code to your safe fitting into a nursery rhyme that only you know. And it crosses any border in the world in just a few minutes for just a few cents in fees. The third weapon of Bitcoin is, at least in theory, that it is unseizable. If you hold your own keys, no government can freeze your Bitcoin by decree. Gold, however, has been requisitioned before. In 1933, during the crisis, American President Roosevelt simply ordered citizens to hand over their gold to the government under threat of imprisonment. With Bitcoin, such decrees are technically impossible to enforce. These aren't just theories. In countries like Argentina, Lebanon, or Nigeria, when the local currency collapsed, entire populations turned to Bitcoin to protect their savings because a phone is enough where a gold bar remains out of reach. El Salvador even made it legal tender in 2021. Here's the contender. Rarer than gold, more mobile than gold, more elusive than gold. On paper, the king should be trembling, except that Bitcoin's path is anything but smooth sailing. Since its creation, the global press has declared it dead 462 times. 4,472 obituaries written by Nobel Prize winners and billionaires like Warren Buffett, and newspapers like Forbes or Bloomberg. But 3 of these deaths were more violent than all the others. 3 times when the whole world really believed it. The first death happened in 2014. At the time, almost all transactions went through a single platform, Mt. Gox, and this platform collapsed in a huge scandal where 850,000 Bitcoins disappeared. Bitcoin plunged from $1,200 to about $200, down 80%. The world press wrote its first obituary, but it survived and bounced back. In 2017, euphoria returned, and Bitcoin nearly reached $20,000. Then a second death in 2018, the bubble burst, and it was crypto winter. Bitcoin crashed to $3,200, down 80% once again. The third death happened in 2022 with the collapse of FTX, one of the world's biggest platforms, led by Sam Bankman-Fried, the crypto golden boy who became a prisoner convicted of fraud. General panic, Bitcoin fell back below $16,000, 3 major deaths, 3 resurrections, and each time a new record afterwards. That's exactly what built its legend and the unshakable faith of its supporters. An asset that survives 472 burials will eventually conquer everything. In October 2025, the crowning moment arrives as Bitcoin hits an all-time high above $126,000. This time, digital gold truly seems poised to dethrone the real thing. Because now, it's not just passionate geeks who believe in it. The financial establishment has joined in. BlackRock, the world's largest asset manager, has launched its own Bitcoin fund. In just a few months, this fund surpasses $90 billion and becomes the most profitable product in BlackRock's entire history. And that's not all. In March 2025, the United States makes an unexpected move few imagined years earlier. The country creates a strategic Bitcoin reserve and starts holding it as a national asset, just like it has always kept gold in its vaults. The contender has officially entered the Court of Kings, except that history had planned a test, a real one. For the first time, the king and contender will face the same storm together before the world, with a result that will surprise both sides. 2025-2026. Economic and geopolitical tensions are exploding. Uncertainty is everywhere, and investors around the world are asking themselves the same question. Where can you safely keep your money? Our two champions will react very differently. As you know, gold is soaring, 60% a series of records, a historic high, and meanwhile, Bitcoin is collapsing. From $126,000 in October 2025, it drops by about 50% and falls back to around $60,000 in the spring of 2026. Those who bought at the peak saw half of their investment evaporate in just a few months. How can we explain such a drastic difference during the same crisis? The answer is volatility. Bitcoin is about 4 times more unstable than gold. Imagine a roller coaster with a seatbelt. Thrills are guaranteed on the way up, but no one catches you on the way down. And this volatility is a double-edged sword. It's what made the millionaires of 2017 and the ruined of 2022 great for dreaming, terrible for protection. We must stay honest throughout. A BlackRock report studied the behavior of both assets during crises. The verdict: in the first 10 days of panic, gold consistently provides better protection. But over 60 days, Bitcoin often ends up rebounding more strongly. In other words, gold cushions the immediate shock. Bitcoin rewards those who have the nerves and the patience to wait. Let's compare them point by point. Bitcoin has the advantage in scarcity. That 21 million cap is set in stone forever, unless Satoshi Nakamoto, its founder, suddenly reappears out of nowhere, while the gold supply keeps growing every year. When it comes to transport, Bitcoin has the overwhelming advantage, a private key versus an armored truck. But in terms of age and trust, the advantage goes to 5,000 years of proven history versus just 16 years of existence. Gold has the edge in autonomy. A coin can last centuries in a drawer without electricity, the internet, or a password, while entire Bitcoin fortunes have been lost on forgotten hard drives. In times of immediate panic, the advantage was proven in 2025 real-world conditions and confirmed by central banks globally accumulating the yellow metal. Who actually won this war? The reality is, they're not even in the same league, which neither side admits. Bitcoin isn't a failed gold. It's a still young monetary revolution. A brilliant bet on the future made for those who are willing to see their stake drop by half while waiting for it to triple. Gold isn't just a relic. It's 5,000-year-old insurance for anyone who wants their money safe tomorrow, no matter what. And that's exactly where the business lesson of this story lies. Remember the governor of the Bank of England at the very beginning of this video. He warned Gordon Brown, gold isn't there to make a profit, it's there to insure. Brown confused the two, and it cost his country billions. 25 years later, millions of individuals made the opposite mistake by putting their safety savings into a speculative asset, sold in a panic, and paid a heavy price for it. The most expensive mistake you can make with your money isn't choosing the wrong side. It's confusing a bet, even a great one, with insurance. Gold is what you keep to sleep soundly. Bitcoin is what you keep to dream big. Both are needed. Neither can replace the other. But Disney didn't understand that when they tried to replace Netflix by making extremely risky investments in a war that cost them $30 billion in losses, as you can see in the video that's showing.